I'm very pleased to welcome Toby Courtauld as my guest today. Toby has been the chief executive of Great Portland Estate since 2002, and he joined just as the market was emerging from the dot-com crash of 2000, built up a pipeline of projects, buying at bargain prices after the recession of 2009, and now enters the coming downturn in a position of some strength, expecting once again to be a net buyer in the future. So Toby, you do seem to thrive on the cyclicality of the market. And what sort of shape do you think the curve will be as we emerge out of COVID-19?
Well, thank you, Peter, and thank you for having me. It's a very good question, that, and you're right to raise it as an important question, because a lot rests on what happens to values over the next few years. And I think the truth is, it's actually impossible to answer as we sit here today. In theory, valuations should be driven by what happens to rents, and that in turn is driven by what happens to the occupier and their desire to be in and take and grow into new space. And when you have a disruptive impact like COVID, or in the last recession like the Lehman crisis and all of the things that followed, you tend to have valuations falling quite steeply as occupiers shrink their requirements and the risk attached to assets goes up and is priced into the equation. Today, you're seeing not the same level of risk appraisal and adjustment that we saw after Lehman yet. Now that may come, but we're not seeing it yet. So, and curiously, we thought that post the referendum in 2016, we would see some significant adjustment to pricing as that risk quotient began to get put into prices, and it simply wasn't. In fact, at the prime end of the market, it carried on going up. On average, it came off a little bit initially, then trended flat. So for the last 3 or 4 years, it's been remarkably flat. So some of that cyclicality you're referring to, we simply haven't seen. Now let's see what happens from here. COVID has introduced significant questions, as we're all aware, particularly in the retail space, and that's as much relevant in London as anywhere else. I suspect it's accelerated issues that were there already, but it's also raised questions about the durability, if you like, of office space and the demand for office space, which I'm a passionate believer in the long-term value of London. I'm sure we'll talk about that. So I think we will come through this intact, if not actually arguably better than we've gone into it, and we can talk about that, I'm sure. But it remains to be seen how this curve will shape up. I'd be really surprised. It would be against every component of my economic belief if we didn't see some degree of correction. The depth and duration of that, I think, will be as a result of how long this disease hangs around and how we react to it, and what the speed with which we can get rid of it plays out.
So as you say, you're a great supporter of London, and you've said in the past, our great capital will come through with long-term growth. But we're now facing Brexit, COVID, and also the rebalancing of the UK economy by the present government. So what do you see as those things which are actually going to drive growth in London in the future?
Well, this is a world city that has been a world city for hundreds of years. It has almost 1,000 years of mercantile history, and most of which was conducted outside the remit of a relatively tightly defined trading agreement, or membership of an organization like the European Union. Now, I was a fan of remaining in the EU, but we're not, and I think we have to accept that isn't going to be the trading arrangements that we have ever again. So we have to find different ways of interacting with the EU. But the reason for me, I remain a passionate believer in places like London, and this isn't unique, is that humans have, I think, an irrevocable need, if you like, to congregate, to share ideas, to experience things together, to grow together. And this idea that we can be as productive online as creative people as we can face to face, to me, is a nonsense. And so I think if you look at the most basic human needs, that concept, that desire that has been with us forever, and COVID hasn't changed. We will come out with a solution, with a vaccine or whatever, that ultimately solves COVID. And that desire to congregate and communicate face to face, I don't think is gone. In fact, if anything, I think some of the lockdown measures that we've had to live through have just made that even more obvious, this need to congregate. Once tourism returns, once businesses remember how important culturally that congregation is, whether it's in an office or in social occasions around the offices in cities like London, once that muscle memory comes back, then I believe you will see the cities like London recover to their former strength. Now that may take a while. I'm not suggesting it's going to happen overnight, but I passionately believe that there is something special about places like this. Where else does the human spirit get so driven by so many positives? Whether it's the arts, culture, whether it's the retail offers that we have here, the restaurants that we have in London, the academic offerings, you name it. This city has pretty much everything going for it. And I don't think that has been defeated by COVID. It's been temporarily paused, but not defeated.
But as your name suggests, you've got a lot of investment in the West End, which is going through a really tough time right at the moment. So what do you think needs to be done to keep central activity zones strong by leaders, whether it's the mayor or Westminster, to make sure that the economy remains there?
Well, I think it's a very difficult thing to maintain strength when you're also at the same time battling closing things down through lockdowns of varying different types. So I think in a sense you have to wait until you can begin to look out the other side of COVID, and whereupon you can begin to do the things that I think really matter, like telling the story, providing leadership, making sure that people are able to come into the city centres. So you need to try and get rid of the barriers, the things that get in the way of that. And there are some obvious things that we can be doing. There's a lot more, I think, that can be done by the leadership, not just of London itself, but also of organisations like TfL, to make very clear what they're doing to keep those spaces and that public transport network free of COVID, and the protective measures they are taking to help. And people need to be given the confidence and the understanding around that. So in the very short term, you can start to break down some of those barriers. I think longer term, there is a lot of storytelling to be done around the reminding people how important these cities are, and how great the offer and broad the offer in London is. But I also think there are some policy specifics. For example, business rate reform. In the business rate system must be reformed, and it has got out of hand. It has become completely unfit for purpose, and that needs to be dealt with. And there are many others besides, where we just need to remove the barriers to trade and help people come back into city centres. I think it's probably too big an ask, but question, can we deal with the congestion charge? I mean, yes, there's an environmental consequence of driving into cities and people using their own public transport to get around. But if it helps bring back people into the city pro tem, then we should consider it. Equally, can we look at ways of reducing the charge for people using public transport itself? Is there a short-term fix that we can use as a stimulus to get people back onto public transport and into city centres? I think that can only really happen, though, once we've begun to get COVID under control, and it feels that needs to happen first.
But also, one of the other issues, of course, we face in the longer term is climate change. And a lot of the projects that you work on are retrofit rather than new build, which is in itself very sustainable and part of the, I'd say, the circular economy. But you've also published a sustainability statement recently, a statement of intent. And you say that it's not just morally right, but an economic imperative as well. Can you expand a bit on that?
Sure. So our sustainability statement of intent, we call it The Time Is Now, is all about us setting out our ambitions in a roadmap to a net zero business. We've committed to do that by 2030. And there are many reasons why we are committing to do that. And one of them is clearly an altruism and an approach to our obligations around sustainability and the environment. But it also, and this is your question, I think, it also just makes very good economic sense. And the reason for that is as follows. The businesses that we have as customers, the office occupiers and the retail occupiers that we have as customers, are essentially interested in hiring the best talent that they can to give themselves a bright future. And that talent increasingly is looking at the morals and the values associated with the company that they're looking at to go and work for. And they're making value judgments. And one of the increasingly important value judgments that they are looking at is the sustainability impact of those businesses and the way in which they are seeking to minimize, or better still, completely change the negative, and in some cases become net positive. And those value judgments will lead that talent to the best businesses, the most sustainable businesses, and it will move them away from the least sustainable businesses. And as a developer and owner of office space, it therefore follows that we should be building the best quality and the highest sustainability credential space that we can, or owning the highest quality space that we can from a sustainability standpoint, because only then will we attract those businesses who have very high sustainability value judgments, who in turn will attract the best people. So there's some positive stimuli in there that will direct us as an industry, I believe, to the best quality sustainability credential buildings that we can possibly deliver. And I think that's an increasingly important component of thinking through refurbishment development, the buildings that we own. We will, I have no doubt, we already are making judgments about whether we hold a building given its sustainability scores versus sell it. We're making value judgments about whether we should develop and how we develop versus retrofit. And so it's finding its way into every component of the economics of a property company and the strategy of a property company. And that's how it should be. So that's what I mean when we talk about economic imperative.
Yes, very, very good answer, if I may say so, because I was talking to somebody the other day who was talking about how the initiative for climate change responses seem to have moved from, might say, the public sector, from legislations on, to actually to the private sector, which is now taking this very seriously for exactly the same reasons that you say.
And you will see, I think you will begin to see differentiation in the economic returns generated from highly sustainable buildings versus low sustainable buildings. And it'll be most immediately visible in the rents that we are able to attract, to receive from the best buildings versus those that don't work. And there'll be a market that will grow up as a result, in which people like us who understand how to deliver highly sustainable buildings will be able to acquire from those who do not understand it, or have chosen not to deliver buildings of high sustainability credentials, and to do the work ourselves. So there'll be a business opportunity in there as well. So I think it's a really interesting time to be thinking through some of these topics, and it's a crucial time.
Toby, thank you very much for that encouraging response, and thank you very much for sharing your thoughts with us on the market today.
Great pleasure, Peter. Thank you.